Hello, in this video we will do a fundamentalist analysis of the Walt Disney Company. The goal is to realize the financial situation of the company, try to reach an approximate value to the fair value of the stock, and compare it to the current price. For this we will rely on the following financial parameters of the company: growth, dividends, assets and indebtedness, profit, number of outstanding shares, and finally the price. But first let's get into a brief introduction to the company. Known not only for the stories of enchantment and the thematic parks around the world, Walt Disney is a multinational company that operates in the entertainment industry. Other than that, it also generates millions in merchandising sales related to its films and characters, owns hundreds of television channels, from the National Geographic to the Fox universe, and currently entered the streaming market with Disney+. The rapid growth of the streaming business, that already has bad 2 million users, has been a very important segment of the company since amusement parks have been varied by the pandemic. Growth. Disney has on average seen earnings per share drop by 24% per year over the past 5 years. Gross revenue increased from $59.5 billion in 2016 to $67.4 billion in 2021, and increased on average 2.6% per year in the same period. Net income, in turn, decreases from $12.5 billion to $2 billion in the same period. Finally, free cash flow went from $10 billion to $2 million and averaged $4 billion a year. Dividends. Dividends have been suspended due to the crisis. Assets and indebtedness. Disney has a total assets of $203 billion and total liabilities of $115 billion. Subtracting these amounts have the company's net worth, $88 billion in 2021. Current assets are $33.6 billion and current liabilities are $21 billion. Profit. Disney, in the last 5 years, has not always posted profits, and had a return on investment of only 1.6%. Gross profit margins and net are 33% and 3.77% respectively. Again, I point out that these and other figures were severely affected by the pandemic. Number of shares in circulation. Outstanding shares increased from 1.5 billion in 2016 to 1.8 million in 2021, representing an average of plus 3.5% per year. What impact does the change in the number of shares have on an investor? For example, if a company is divided into 10 shares, if I own 1 share, it means I have 10% of the company. If suddenly the quoted concerned issues more shares, for example, for a total of 12 shares, it means that my stock now represents less than the original 10% of the company. However, there are situations where it can be advantageous for a business to issue shares. For example, if a CEO of a company thinks that the shares are being traded at a higher value than the amount he thinks they are worth, then issuing shares could be an alternative form of financing to take on debt. Thus, in addition to not having to pay interest on the borrowed capital, eventually in the future, if the shares fall to their fair value, the company can then repurchase the same number of shares it issued earlier for a lower value. Price. Currently the company has a market capitalization of $260 billion. Current earnings per share are $1.70 per share. Dividing the current share price by this value, we have a price on profit of 90 times. Finally, to get an idea of the fair value of the company, we can divide the total price of the company by the average free cash flow of the last 5 years, which gives us a multiple of approximately 65 times. Which means that if everything remains the same in the future, Disney will take 65 years to generate cash flows equivalent to its current pricing. Conclusion. In short, Disney is a great company with a very large diversity of revenue sources. Difficult to replace, mainly in the entertainment area. Before trying to reach a fair value for this action, we should not forget that the numbers were greatly affected by the pandemic. However, already before the same, the company had multiples of prisoner quite high, and in my opinion difficult to explain, even with the rapid growth of the streaming sector. I hope you enjoyed this video. The numbers used are rounded values, and the opinions given are just my personal perspective. It is not a recommendation. Leave suggestions in the comments of actions that you would like to be analyzed in the next videos. Thanks for watching and good business.